to take a look at commodity prices, particularly here in Africa, where we have seen the impact of the higher prices. I've got just seen here inflation numbers coming out of Kenya, that inflation coming out of 12.1%, and in neighboring Uganda, we're looking at 14.1%. So it's having a very dramatic impact indeed on the inflation outlook. So just give us a sense, in terms of the main commodities, what the outlook is for going forward. Abah, can you hear me?
Yes, I can hear you. Can you hear me?
Absolutely, I can hear you now. Did you get my question? Just wanted
to... I
Yes.
got your question. I think the inflation numbers we're seeing now in East Africa are probably the result of lag effects, given high prices we saw at the tail end of last year, which sort of continued into the first quarter of this year. I think going forward, we should expect soft commodity prices to moderate. But again, we should really differentiate between the markets. For sugar, we're looking for prices to trend downwards, given the improving supply outlook. For commodities such as corn, we are more bullish. There's very, very tight global stocks for all crop. And as we head out into the new season globally, stocks are also looking under pressure. So we should expect prices there to head upwards. For key commodities such as wheat, we are bearish wheat, given the huge expansion in acreage that we're expecting from the U.S., which, as you know, is the largest exporter of wheat globally. And we're also seeing much improved weather in the Black Sea region, which last year accounted for, or at least triggered, the significant spike in wheat prices on the world market. So it is a mixed bag, but overall, we should be looking for prices to moderate in the second half of the year.
Yeah, that would be very welcome news indeed by the central banks of the countries in Africa. But how much of an impact are we seeing from the weak dollar coming into these prices? Because if by extrapolation, I mean, if you look at what the impact has been of the dollar on your metals, if you like, your hard commodities, are we seeing any of that also having a play in the soft commodities sector?
I think there is a key differentiation between the base metals and the soft commodities. While obviously there is always an impact if you have a weaker dollar or if you have rising energy prices, the key or the critical issue within soft commodity markets has been supply shocks.
Right.
And we saw that in the 2010-2011 season, primarily because of adverse weather. I think this was well documented globally. We are still seeing signs of that, or smoldering of poor weather. But going forward, the weather outlook is at least much improved compared to last season. So the sort of shocks that we saw last season, we don't expect them to be replicated in 2011, 2012.
So everybody should be pointing to a degree, some daggers at the U.S. because we do know it's the result of their policy that we're seeing some of this coming through, particularly the high oil price. I've just been going through your agricultural scorecard, and for the commodities that affect Africa particularly, I just wanted to run through quickly your position. On corn, you're bullish. On palm oil, which we know is produced in West Africa as well, you are neutral. On rice, you are neutral, as well as wheat, you are also neutral, which would be very good news indeed, given the very, very strong, the fact that Africa is a net importer of wheat. On cocoa, however, you are neutral to bullish. Why?
Right. Well, I mean, what we have, the cocoa market is actually quite interesting. We saw supply risks push prices to multi-year highs, primarily due to the political events in Cote d'Ivoire. Prices came tumbling down, and I think they tumbled to levels which are below what the fundamentals suggest. What I expect going forward is that we are going to see an improved uptake in Europe and the U.S., which account for over half of global cocoa demand. I mean, you probably should link this to the economic outlook for these economies, given that, in 2008, we had strong demand from these two regions. And then in 2009, as the recession hit, demand plummeted. But we saw some recovery in 2010, which we expect will strengthen further in 2011. And so we are seeing signs that cocoa grindings are improving, and I expect to see that continuing in 2011, which is why I expect cocoa prices to sort of, trend moderately higher, given stronger demand in Europe and the U.S.
Yeah. The other two crops that I have here that you have highlighted include sugar, where you are neutral to bullish. And I've just been talking to the CEO of Mumia Sugar in Kenya, and he was talking about some of the challenges there. But in terms of what you are seeing in terms of prices, overall prices going forward, we do know, of course, that Kenya is impacted by global prices. You are neutral to bearish. What are the factors there that you see in play?
There's two key developments that we have seen over the last couple of weeks. The first is India. As you know, India has a huge influence on sugar markets, given that it is not only a major consumer of sugar, in fact, the largest consumer of sugar, but it is also traditionally the second largest exporter. And if you have weather events in India, which affects output, that has huge implications for global markets. We are seeing improved output in India, and we recently saw policymakers in India looking to approve a second general license to export. So this is actually quite good news, which suggests that there are surplus exportable stocks in India. The second issue we saw is Thailand, which is the largest exporter in Asia, and we saw huge, policymakers are actually looking for a huge harvest in Thailand. So this is also having a bearish impact on prices. So these two events have indeed been what have, put a lead on prices, and which we expect would be bearish for the market going forward.
Yeah, one of the stories we've been following this week as part of our focus on soft commodities is the story of coffee. We have picked up on a trend that seems to be suggesting that Africans, apart from producing the coffee themselves and exporting most of it, are actually also beginning to consume it. Now, your focus for the crop is you see structurally robust demand and you're bullish on the crop. Why is that?
Right. I mean, I think you've said it yourself. We are seeing rising per capita consumption, but not just from the traditional consumers of sugar, but as you rightly mentioned, from the exporters of the crop. So we're seeing countries in Africa consuming more coffee. We're seeing Ethiopia, for example, is consuming more coffee on a per capita basis. We're seeing Brazil consuming more on a per capita basis. We're also seeing Vietnam consume more on a per capita basis. So the developing economies are consuming more coffee, and so that's just leaving a little bit less exportable stocks. But the other key thing that is happening in the market is in Brazil, which is the largest producer and exporter of coffee. They are going through what we call an off year in the biennial cycle. So they're having a lower harvest. But the other key thing is to do with Arabica coffee, which is the quality coffee which is mixed, which roasters tend to mix with Robusta for the prime coffee. What we're seeing in the market is stocks being significantly tightened because the biggest producer or a key producer, which is Colombia, has been having a poor year, and this has been going on for I think 2 or 3 consecutive seasons. So that is putting pressure on global stocks. So the combination of these factors, so fundamental factors of rising per capita demand, but also supply issues in Brazil and in Colombia, are all contributing to raising prices.